We don't need to get into the reasoning to buy back stock or not. Let's get the price, what he said about that. I'm not going to buy a lot of stock back at these prices. What do you make of that comment specifically? Because it does speak to the fact that it did hit a new high today.
Well, I think Jamie Dimon is borrowing the phrase from Warren Buffett, be fearful when others are greedy. I asked that question, and I said, are you smarter than the $7 trillion investment grade bond market? And he said, spreads are too tight. People are too happy. You need to be more cautious. So I like the fact that Jamie Dimon has this healthy paranoia because anything can hit you when you run a big bank. On the other hand, I think investors are frustrated seeing that if they're not buying back the stock at this price and Jamie Dimon's selling stock for the first time in his career, why should anyone else buy the stock? So I see this as a short-term overhang for the stock for what's otherwise a very solid long-term company.
But I mean, it does speak to the fact, does it not, that, look, it's got Goldman Sachs hitting a new high yet again today. These stocks have been on a tear. Is it time to sit back and say that maybe it's been too good in this space?
No, I think the stocks are just getting going. I mean, JPMorgan's Investor Day, which just ended a couple hours ago, Scott, was very positive on capital markets. They guided higher today. They were very positive on credit quality. Credit card losses are coming in below where they expected. And is also very positive on excess capital for buybacks, not for JPMorgan. So JPMorgan's Investor Day was very bullish for Citigroup.
other than Jamie Dimon himself?
Exactly. It was bullish on Citigroup because Citigroup is big in cards. They're big in capital markets. They have excess capital. And you know what? When you trade at 1/3 the price of JPMorgan and you can buy back stock, that was very bullish for Citigroup. So thank you, JPMorgan. Jane Fraser should send a thank you note to Jamie Dimon saying thank you because your themes support our stock.
So when Jamie Dimon says I'm cautiously pessimistic, that's just Jamie being Jamie in your mind. There's really not that much to be pessimistic about when it comes to his business, it sounds like you're saying.
Yeah, I think Jamie Dimon's more concerned about the geopolitical risks and the debt levels at governments and things that just happen to go wrong, the tail risks overall. But what you're seeing in JPMorgan's numbers right now, we're fine, we're good. He's worried about, the kind of Six Sigma event or maybe Three Sigma event.
So the NVIDIA of banking, you always have a way with words, and you like to do that sort of thing. And you're talking about JPMorgan.
The one
right?
number.
That's the one?
The one number that stood out from JPMorgan's Investor Day today.
GPU sales?
No. $17 billion of tech spend. $17 billion. That's a record. No bank has ever spent $17 billion on tech in 1 year. That's equal to the total expenses, all expenses for the 8th largest bank. That's what JPMorgan spends on tech alone. They're spending it on AI. They're spending on digital banking. They're modernizing the back office. Mm-hmm. They're trying to be the preeminent digital bank 2.0, which is the next version of banking where you create new products, services, relationships, and engagements that were previously unavailable in analog form. So JPMorgan is at the forefront for being that digital leader. It's just that Jamie Dimon hasn't internalized that to become a tech company. He still considers himself a bank, and that's why I'm wearing my tie again. I'm back to being a bank analyst. I guess I'm not a tech analyst.
Yeah. Your favorite name right now in the space is still Citi?
My top 3 names are Citigroup, Citigroup, and Citigroup.
Really?
Absolutely.
Why not? Why isn't Goldman Sachs in that mix?
Well, Citigroup has a component of the capital markets, which are going better than expected. Citigroup.
You don't think Goldman Sachs is capital markets?
Look, I recommend Goldman Sachs. It's done really well, but Citigroup is still trading at a 30% discount to tangible book value. Scott, this is my 4th decade doing this. It used to be you would go to tangible book value at the depths of a recession. They're at a 30% discount, and we're not even in a recession.
Well, because they had to do a whole restructuring for the most part as Jane Fraser came in and that made that her thing.
And they just finished a watershed 7-month org simplification during which many said Citi would blow up, they'd lose revenues, they'd lose people. And guess what? They exceeded expectations in the first quarter as much as any bank, and they're on track to have the best 2024 guide for revenues and expenses of any bank. In over 3 years, we expect earnings to double. Only one other bank can get even above 50%. That would be Goldman Sachs. So Citigroup is far and out our number 1 pick.
Brian Moynihan sitting somewhere. He's Mayo. What about us? What about me?
Number 2.
Well, you just said 1, 2, 3 with Citi, and then you wax poetic about JPM.
Well, number 4 then. Okay, so Citigroup is in a league by itself in terms of fundamentals and the incremental improvement. But if you force me to give me a second name, it would be Bank of America. I just met with the CEO. He's chomping at the bit to buy back his stock. So talk about a difference or dichotomy between JPMorgan and Bank of America. One wants to buy back their stock, Bank of America. The other says, I don't want to buy it back here.
One more quick one, just because let's end where we started with Diamond talking about why he doesn't like the buybacks for the reasons why some others do. Do you have a thought on that as it relates to banks buying back their shares? Like if he said, I'm going to buy back stock and they made that a focal point, would you say I'd rather you use the cash for other purposes? He seems to want to use it for other purposes.
I think the banking industry using buybacks is far better than lending to Latin American countries in the 70s, the 80s, or commercial real estate in the early 90s, or the tech bubble around 2000, or to mortgage companies and others during the global financial crisis. So it gives you a nice extra bucket to deploy your capital to. So it helps to moderate the excesses. So I like buybacks generally, but not all the time. So if he wants to pick his spot some, but to have an absolute statement say, I'm not going to buy back stock, I thought Jamie was being too much Jamie on that comment.